In the annals of financial history, few events loom as large and terrifying as the great stock market crash of 1929. It was a pivotal, cataclysmic moment that shattered fortunes, redefined an era, and plunged the world into an unprecedented economic crisis. Yet, amidst the pervasive euphoria of the Roaring Twenties, as millions poured their life savings into a seemingly unstoppable bull market, one legendary figure stood in stark, chilling opposition: Jesse Livermore. While the masses celebrated an endless ascent, Jesse Livermore meticulously prepared for the inevitable collapse. He was not swayed by the prevailing optimism, nor was he blinded by the infectious greed that gripped the nation. Instead, he observed, he analyzed, and he quietly positioned himself for a move that would etch his name into financial lore forever, shorting the market just as it teetered on the brink of its devastating fall. Subscribe now, leave a like, and write any comment. This way, you'll help more people see and hear this message, and I'll know that my work is not in vain. His legendary feat, accumulating an estimated $100 million in profits while others faced ruin, was not a stroke of inexplicable luck, nor the result of insider information. It was the direct, inevitable consequence of an unwavering adherence to a specific set of timeless market principles he had painstakingly learned, often at immense personal cost, through decades of triumphs and devastating bankruptcies. The question that echoes through financial history is not if the market would crash, but how one man possessed the chilling foresight and the iron discipline to time such a monumental event with such precision. How did he see what others, caught in the grip of mass delusion, so utterly missed? What were the hidden signals, the subtle cues, the methods that allowed him to stand against the tide and profit from universal despair? This video is an exploration of that very question. It promises to dissect the intricate methodology, the profound psychological fortitude, and the meticulous observational skills that enabled Jesse Livermore to achieve one of the greatest feats of market timing in history. We will peel back the layers of his genius, revealing the precise principles that allowed him to anticipate and profit from the terrifying storm of 1929. Jesse Livermore's ability to foresee and profit from the 1929 crash was rooted in his relentless, almost obsessive, objective observation of the market's internal mechanics, precisely when others were blinded by external noise. He held a profound disdain for conventional wisdom, newspaper headlines, and public sentiment, understanding that these were largely reactive, designed to explain moves that had often already transpired. His focus was singular and unwavering, the unvarnished truth displayed on the tape, the real-time record of price and volume. He viewed the market as a living, breathing entity, constantly communicating its true intentions through its own actions, not through the optimistic pronouncements of pundits or the despairing cries of the masses. While others chased earnings reports and merger rumors, Livermore meticulously watched how stocks reacted to news, how they moved on volume, and how they behaved around critical price levels. He understood that these raw data points formed a language, a series of hidden signals that few truly comprehended. His method involved an intense focus on key levels of support and resistance. He understood that these were not just arbitrary lines on a chart, but psychological battlegrounds where the forces of supply and demand clashed decisively. He paid meticulous attention to how stocks tested these levels, whether they broke through with conviction on high volume, signaling strength, or failed to hold them, signaling weakness. These interactions were critical clues. Crucially, Livermore possessed an unparalleled ability to discern subtle distribution by smart money. Even as prices might be nominally rising or holding steady, he would look for signs that large, informed players were quietly unloading their positions. This might manifest as stocks failing to rally on good news, or increasing volume without corresponding price advances, indicating a weakening underlying demand despite outward appearances of strength. Ultimately, Livermore's chilling foresight in 1929 came from his unwavering commitment to seeing what the market was doing, not what it was saying, or what others thought it should do. While the public bought into the illusion of perpetual growth, Livermore observed the relentless distribution occurring under the surface, the subtle shifts in price behavior, and the pervasive weakness appearing in leading stocks. His precision was born of objective observation, not speculative intuition alone. Even with unparalleled observational skills, Jesse Livermore's legendary success in 1929 would have been impossible without his equally legendary patience. He held a profound conviction that the big money is in the waiting, not in constant activity or frantic trading. He understood that rushing into a position, however tempting, invariably leads to premature entries, wasted capital, and the frustration of being caught in whipsaws or false moves. Livermore was never afraid to sit idle, sometimes for weeks or even months, conserving his mental and financial energy. He knew that the market eventually reveals its true intentions, but only to those disciplined enough to wait for unequivocal clarity. He resisted the common impulses of impatience, boredom, and the fear of missing out, FOMO, knowing that these emotions are the speculator's deadliest enemies, compelling action at precisely the wrong moment. His method involved a crucial process of testing the market with a small, almost insignificant, initial position before committing substantial capital. This was not a gamble, but a probe, a carefully calculated experiment designed to elicit immediate and undeniable feedback directly from the market itself. Did the price immediately move in his favor, even by a small margin? Did it hesitate, or did it move decisively against him, signaling a fundamental misjudgment? This rigorous discipline allowed him to confirm his bearish thesis on 1929. He observed the signs of weakness, the distribution, the failing rallies, but before taking his truly massive short positions, he would test. If his small short probe saw the market quickly weaken, it confirmed his conviction. If it resisted, he would exit with a negligible loss, preserving his ammunition. He allowed the market itself to validate his view, rather than relying solely on his own intellectual certainty. This unwavering commitment to waiting for undeniable confirmation minimized his risk while profoundly amplifying his potential profit. By entering only when the market unequivocally declared its intentions, when his observations were fully validated by actual price behavior, he ensured that his capital was deployed with maximum efficiency and the highest probability of success. It was the antithesis of gambling, transforming speculation into a disciplined pursuit of high probabilities. Ultimately, Livermore's astounding timing in 1929 was a masterclass in the power of patience fused with the demand for undeniable confirmation. He did not predict, he observed, he waited, and he acted only when the market itself screamed its next direction. This disciplined patience, cultivated over decades of hard-won lessons, was the silent yet most potent force behind his ability to profit from the greatest market collapse in history. Subscribe now, leave a like, and write any comment. This way, you'll help more people see and hear this message, and I'll know that my work is not in vain. Even with unparalleled observation and ironclad patience, Jesse Livermore's legendary success in 1929 would have been impossible without the crucial final component, the decisive strike, executing his strategy without a trace of emotion. The moment of undeniable confirmation, when the market unequivocally declared its intention to collapse, was the critical juncture where opportunity translated into colossal profit. Hesitation, fear, or any vestige of hope would have proven fatal. In the terrifying environment leading up to the 1929 crash, as the general public remained gripped by irrational optimism, shorting the market was an act of profound psychological courage. It meant standing against the overwhelming tide of popular opinion, defying the pronouncements of financial leaders, and facing ridicule from those who believed the bull market would never end. Only absolute emotional detachment could enable such a contrarian and precise execution. Livermore possessed the remarkable ability to suppress all hope for a market rebound once he initiated his short positions. His decision to sell was based on objective market signals, not personal desire for the market to fall. Similarly, he conquered any fear of shorting a seemingly resilient market, understanding that his actions were rooted in the truth displayed on the tape, not in the pervasive anxiety of the crowd. His execution was a masterclass in methodical precision. He did not make one large, impulsive move. Instead, he systematically scaled into his short positions as the market continued to weaken, adding to his bets only when the price action continued to confirm his bearish thesis. This allowed him to build a colossal position without disrupting the market or revealing his full hand, demonstrating disciplined aggression, not reckless abandon. This ruthless adherence to his plan, even as public hysteria grew and the market entered its terrifying freefall, was paramount. He did not second-guess his decisions, nor was he swayed by the cries of panic from others. His strategy was defined, his confirmation received, and his execution was unwavering. This unflinching discipline allowed him to ride the entire devastating wave downwards, extracting immense profits while countless others were being annihilated. Ultimately, Livermore's flawless execution in 1929 was a direct result of his profound emotional detachment. His ability to act with cold, calculating objectivity, free from the corrupting influences of hope, fear, and greed, enabled him to translate his keen observation and patient waiting into monumental financial triumph. The market does not reward emotion. It rewards dispassionate, precise, and unwavering execution of a well-conceived plan. The staggering success of Jesse Livermore's timing of the 1929 crash was not a fluke of history or a stroke of divine luck. It was a profound testament to the power of his timeless market principles, rigorously applied. His ability to accumulate an estimated $100 million amidst universal ruin served as undeniable proof that the market, however chaotic it may seem, operates by immutable laws that reward objective understanding and unwavering discipline. His triumph was built upon a foundation of relentless, objective observation, seeing the market's true language beyond the deceptive clamor of news and public euphoria. He understood that the market always speaks its truth, and he cultivated an unparalleled ability to discern its subtle signals of distribution, its weakening internals, and its shift in the line of least resistance, long before the general public sensed any impending danger. This profound observation was fused with unwavering patience, the discipline to wait for absolute clarity and undeniable confirmation. He did not predict. He waited for the market itself to scream its intentions. This strategic inaction, this willingness to sit idle while others gambled, protected his capital and mental fortitude, ensuring his capital was deployed only at the most opportune moments, when the probabilities were overwhelmingly in his favor. And finally, his victory was cemented by ruthless, emotionless execution. Once the market confirmed his bearish thesis, he acted with decisive precision, systematically scaling into his short positions, unswayed by hope for a rebound or fear of being wrong. His disciplined adherence to his plan, his willingness to stand against the crowd, and his ability to cut ties with losing assumptions allowed him to ride the entire devastating wave downwards. The lessons gleaned from this historic event are universal and timeless, extending far beyond the specific circumstances of the 1929 crash. They underscore the absolute necessity of psychological mastery, the critical importance of capital preservation, and the unparalleled power of a methodical approach to speculation. Livermore's willingness to stand alone, to trust his own analysis over the collective delusion, was a direct consequence of his unyielding adherence to these principles. Ultimately, Jesse Livermore's legendary timing of the 1929 crash offers an invaluable blueprint for anyone seeking true market mastery. It is a powerful reminder that fortune favors not the brave or the lucky, but the disciplined, the patient, the objective, and those who dare to see the market for what it truly is, beyond the veil of emotion and public hysteria. His story remains a stark, yet inspiring, testament to the enduring power of timeless principles in the unforgiving arena of financial speculation. Subscribe now, leave a like, and write any comment. This way, you'll help more people see and hear this message, and I'll know that my work is not in vain.